Welcome to the Traders Clinic, your regular shot in the arm of trader insights, philosophy and knowledge, brought to you by two professional money managers, Ali Crooks and Charlie Burton.
In each episode, we answer your burning questions and cover all things from the world of trading. So we're back.
Indeed.
We do.
We are very happy today.
Yes.
Let's get on before I start crying.
Well, this trader wasn't very happy when he started. So the subject of the main core subject of today is a trader that I spoke to who'd spent the first 3 to 4 months of his trading career breaking rules, making mistakes, and as a result of that, he was losing money. And he finally got his act together. So he said, I've been trading with more discipline, more focus, sticking to all of my rules, and I feel as though I should deserve better. And I thought it brought up a really interesting concept, this idea that when you're doing everything right, we usually in life get a reward. And interestingly, with trading, you can be doing everything right, sticking to your plan, sticking to your trades, but short term, you're not actually getting the result you want or not getting rewarded for your efforts.
Yeah, it's a tough one, isn't it? It really is, because in any other job, like you say, you would get, even if you were just shuffling paper on a desk at the end of an hour even, you've done a task and there is an end result for the inputs that you've put in. And yet when we trade, well, there is an end result, but it's not always the end result that we want, for starters. And so from a time perspective, that's one thing. We'll discuss that probably later as well. But from a time perspective, the inputs versus outputs changes. But also, like coming back to this trader who has done everything right and then got nothing to show for it, which is just, that is the realities of trading. But the only thing that will work for him is time, really. Yeah. Because 2 weeks isn't a lot of time. In his world, it's an eternity. And when you're in the middle of it, 2 weeks feels like a long time. When you look at a chart and you put a daily chart on and you have it showing back a year's worth of data, and you see these little periods where you'd say, oh yeah, it was just when choppy for a couple of weeks there. You wouldn't think anything of it. It's in the grand scheme of things, the market is moving. So I think perspective is really important to traders as far as, one, the time that they're looking at with regards to this trading that he's been doing, but also saying, oh yeah, I need to give it more time, because over a bigger data series, over a longer period, it's highly likely it's going to be fine, but it's no less frustrating in the short term.
Exactly. And I think it's easy to look back, like you said, and look at a 2 week window and it seemed like nothing. But when you're in that 2 week window, it feels like a long period of time. Yeah. So yeah, perspective I think is key. I said that look to expand your space and time horizon. Almost accept by default that you are thinking short term. There's a huge amount of recency bias going on because he's focusing on what has happened in the last 2 weeks. But if you accept that by default, it's natural for you to think in too short a time period, having that awareness and just practice thinking over a bigger period of time. And I think, we always talk about resilience, and a trader, both of us know, says that it's the hardest game in town. And I think part of the reason it is the hardest game in town is because people are naturally looking at the result over such a short period of time and then making decisions on it. The risk for this trader is he gets deflated and starts going back to making errors, over leveraging and making mistakes. I said to him, this is the critical point where you've got to, despite the fact you feel you should deserve something, is put that aside and carry on focusing on the process and not worry about the fact that the market hasn't rewarded you for 2 weeks of diligent effort.
That is so typical. This instant gratification world that we live in, where we have an expectation, as you've just said, for the work that we put in and over such a short period of time, but it takes a lot longer. There's a story about that we'll come back to maybe later in this episode or the next one.
Yeah, there we go.
About time.
Yes. So interesting one here. Question we've had in, is 5% per day realistic?
Well, I was presented with this. It was presented to me on one of these TikTok reels that we do here in the studio. And this relatively young man was talking about having £500 in a trading account. And the way that he was describing the profits, he'd only been trading like 3 months. And he said, I'm just making about 20 to 30 pounds a day, just small amounts. And so in monetary terms, that is a small amount. But of course, that's going to appeal to people thinking, I could put £500 in a trading account, and if I can make £30 a day, that's all right, But actually, you do the math, and that's 5 to 6% a day, somewhere like that, if my maths are right, and 5 to 6% a day is a rather large amount, because even if you went up 5% a day, that's 5 days in the week. Let's exclude trading cryptos at weekends. So it's 25% a week, 100% a month, 1,300% compounded annualized, or maybe more than that. So do you think 1,300% per year is realistic, Mr. Potential Punter out there? The thing is, when I see, and you and I see these sorts of videos, it's that old adage, that old line. We've been to the Punch and Judy show. We can see the strings of the puppets. Unfortunately, a lot of people out there don't see those strings, and they believe the nonsense that they're being shown. And at the end of the day, it is utter raw nonsense. But you dig in here.
No, I think I think what's really interesting there is it links back to what we were saying earlier. Is by default you took that short-term result that they're talking about, the 5% a day, extrapolated it over a year, and suddenly the return looks completely unrealistic. But because people are talking in small monetary denominations, that seems really conservative. Yeah. But in fact, it's actually huge risk. And the chances are, let's assume that trader assume the trader was achieving that result. Well, the only way they'd be doing that consistently is by risking too much. And we all know that if they're risking too much and allocating too much risk per trade, it's not going to last that long, and they're not going to be able to do it for long because they'll end up blowing up. And the risk is that maybe they did make 5% a day for 2 weeks. Well, what if they then said, I'm now going to put 5,000 into my trading account and operate at the same risk level? They then they'll end up blowing up, because to get that kind of returns, the chances are they're risking too much per trade, or allocating too much in what they're doing. So again, it's these sound bites that you hear and you think, well, that sounds all right, but actually what's going on is high risk trading.
What concerns me is that there's one thing, us seeing this sort of stuff and then saying, look, this is completely ridiculous, and then people still want to believe it. And I'll see comments, people say, yeah, but if I day trade and I took 5 to 6 trades a day, and 3 of them won, 3 of them lost, and on the 3 that won, I'm making 2 to 1, whatever, blah, blah, blah. They come up with this stuff, and they're like, so surely it's feasible, Charlie. And so they still want to hold on to this whatever you want to call it, this dream, this pipe dream of making those kinds of returns. It's not that anybody couldn't make 5% in a day. I've done it, you've done it, I've made more than that, and you have as well. On a single day, anything can happen. But what we're talking about here is, as you said, consistently every day. That's the implication of that content of what's been put out there. And that's where we take issues with this, because it's unrealistic to be able to make those kinds of returns day after day, or even if it wasn't every day, but the world's very best traders don't make 1,300%. Look at the track records of hedge fund managers. Okay, there's definitely an argument there that with hedge fund managers, they're managing a lot of money. They can't necessarily jump in and out of the market the way that an individual retail trader can. But even in the latest Jack Schwager book, and the latest book, which was Unknown Market Wizards, the very best traders at average, they were incredible returns, 300% a year over the previous few years or whatever it was. And that was quite outstanding. So, so these people are doing, whatever it is, 5 times that? No, I don't think so.
I very much doubt it.
After 3 months of trading.
Yes. Oh, well, of course, yeah. That makes it all right.
Yeah.
So, last question. What do you believe is a reasonable win rate? I thought that was interesting. What do you believe is a reasonable win rate?
I'm okay with any kind of win rate. But where I have issues is that, unfortunately, so many traders out there want an 80 or 90% win rate. I was working with a trader psychologist, and he said one of the questions he asks traders when they come in for some sessions is, how much would you expect out of for every 10 trades? How many out of those 10 trades would you expect to be right on? And he said the amount of people will come in to say, 8 or 9.
Yeah.
So that's the unrealistic side of things. It's not that in the short term, anyone couldn't have a string of, 9 winners in a row out of 10 or whatever. But over the long term, it's about what's realistic. And so that's much less realistic in that regard. In fact, actually, I'll come back. You add to that. Noel.
Well, yeah, I think I want to pick up on the fact that you said any trader can have 9 winners in a row. And if you link that back to what you see out on YouTube and on social media, you'll see something on TikTok saying our strategy's got a 95% win-loss ratio. Yeah, between Monday and Friday that particular week. A lot of these traders are not lying with the win-loss ratio they're stating. They're just not being clear about what time frame that winning period was. It might have been a month, it might have been a week. But do you know any traders that over a period of 3 years are operating at a 90% win-loss ratio? I don't. No. And I think that's the challenge, is that they know that even if what they're saying is legitimate over that short time period, that's going to attract people in based on exactly what you've said, is when people are given the opportunity to pick, they'll pick 80 to 90%. And I find that interesting because often I'll say to a cluster of traders that I'm talking to, you all know that you're not expecting an 80% win-loss ratio, and they all agree with me. But I bet if they were left to give the opinion without me stating the question, they'd actually hope for a 70 or 80%. Yeah, so they intellectually know that it's unlikely it's going to happen, but they're all hoping that they could achieve that. And also, you see a lot of traders will operate almost subconsciously or unconsciously to try and achieve that. So they'll over-optimize the strategy, they'll backtest, they'll add in indicators, and actually all they're trying to do is relieve the uncomfortable or fear around having too many losers per 10 or per 100 trades. And part of the skill is to be able to accept that over 100 trades, if you're operating at 60%, which is still an amazing win-loss ratio, that's still 40 losers over those 100 trades that you're going to have to deal with.
Yeah, I think, and that's the thing. Spend more time working on your mindset in dealing with losses rather than trying to find every technical way of increasing your win rate, which is just going to take you down a rabbit hole. One final thing on that is, I literally just heard this week, this is fund manager, I think he's American. He's just yielded 124% annualized return with only a 20% win rate. He runs his winners and he has lots of stop outs, but a 20% win rate, and yet he's just yielded a return of 124%. I think that gives... Now, I know for most individual traders, they're not going to want to have a 20% win rate, even for you or I. It's not really where we, I'm not that. So at times, around that, but at least it gives people some food for thought that, I don't need to be right as often as maybe I'm looking for. Think about overall profitability.
Great point to end the show.
And on that note, his name's Ali Crooks.
His name's Charlie Burton.
Trade safely.
Out.